Okay, I have 15 minutes to talk about Amazon. Just so you know, I run the research business at Bloomberg. We provide investment research to Bloomberg's customers around the world. So I've got 300 analysts covering 140 industries, 3,000 stocks, and so on and so forth. So we're a global research department like you would find at Goldman Sachs or Morgan Stanley. And so thanks to Mike Bloomberg, we've built one for our customers. So my research coverage, I've spent 30 years on Wall Street covering the media sector, including WPP and the internet. I was the third internet analyst in 1993 covering a company called America Online. And so I've seen it all kind of come up through Amazon, which is just awesome. So Amazon, along with Netflix, are the two most amazing companies I've seen in the public marketplace, including Google, since I've been around. So it's very cool. So I'll tell you what I know, what I've learned about Amazon. All right, I always start with the stock chart. The white line is Amazon. The orange line is the S&P 500. 10 years. Amazon's returns have been 12x the general market. This is a good stock chart. You like to have one of these. This is Amazon. The market loves this name, and I'll talk to you about what some of the market participants are seeing right here. So this is a monster company, $450 billion in market cap, $170 billion in revenue, growing 20% plus, by the way. So this is a juggernaut from a financial perspective. The reason? It's a revenue growth story. Amazon's revenue growth over the last 5 years has been about 25%. Google's been about 20%, and you can see some of the retailers and the S&P 500 around 5%. This is a top-line growth story. It is not a profit story. 170 billion of revenue, about 5 billion of profits. Jeff Bezos doesn't care about profits. What does he do with all the money he generates on revenue? I'll show you that in a minute. It's not delivering it to Wall Street, and you would think Wall Street would not reward the stock with this huge rise, but Jeff Bezos has gotten investors to buy off on the fact that, don't worry about it. I'm investing in a company, I'm growing, I'll give you profits later on. He's been saying that for 10 years, and we've been waiting for 10 years, but it's been a great story. Where has he put the money? He's put it in R&D. So an R&D for Amazon, and you can see his R&D is higher than even Google, okay? So he's putting the money back into the company, R&D, fulfillment centers, technology, getting closer to the customer, building out distribution, buying planes, buying ships, getting into the movie business, getting into the cloud business, anywhere where he thinks he can grow his core retail business, that's where he's investing the money. Again, Wall Street is giving him a huge pass on this because we know that, or we believe that the marketplace opportunity is so huge for Google across the board. So, when you think about the ecosystem, this is what they talk about all the time. We've got 2 million sellers, we've got 310 million buyers globally, just a huge global business, and all of these numbers continue to grow. The gross merchandise value continues to grow double digits in a retail world, which is growing low to mid single digits. So GMV continues to grow for Amazon and for the Alibabas of the world as well. So the e-commerce story is in play. This is the chart that sold Amazon. Continues to sell Amazon to investors. It sells Alibaba to investors. That is just simply US retail sales in white, the e-commerce in blue, and there's little Amazon's gross merchandise value, the amount of goods that are bought and sold on Amazon. So what you see is retail sales in the US, okay, but the growth you really see is in e-commerce. That's about 10% of US retail sales now, growing double digits. That's the story. Jeff Bezos will simply say, gee, it was 7% a few years ago, it's 10% now. Where will it be in 5 years, 10 years, 20 years? His number is much, much higher than 10%. That's why he continues to invest in R&D and in the capital expenditures of the company, why he continues to invest in all different types of verticals, including the grocery business, believe it or not. So when you talk about Amazon, they talk today, they're not just an e-commerce company. They've kind of got a lot of things going on, and so it's hard to talk about in 15 minutes, but they got a lot of things going on. But the company's kind of boil it down to 3 pillars of growth. Number one is Amazon Web Services. That's their cloud business. Why are they in the cloud? Well, they're a technology company. They have a lot of data. They need to store a lot of data. So let's put it all up in the cloud. They are the leader in that business. And I tell any CEO that I meet whose stock I cover, if you ever want to double the multiple in your stock, just talk about the cloud, because the market loves the cloud. Amazon's the leader in the cloud. Their core marketplace business continues to grow, and that is simply just a play on the macro play we just talked about here. This is the way to play it. And then third has been Prime. their Prime membership has really been the driver of growth of their core marketplace products. They're trying to drive Prime memberships because they know Prime members are much more valuable. They buy a lot more stuff on Amazon, and they are making huge investments across the board, and I'll talk about that in a little bit, to drive their Prime membership growth. I would argue that's probably the key driver of their core business outside of the cloud. So talking about Amazon Prime, Amazon Prime's members, they spend about 3 times the amount of non-Prime members. So again, that's the real driver here. They have about 310 million Amazon customers, and so they only have about 70 million of those are Prime, so there's a lot of upside to drive Prime membership growth. A lot of geographic expansion globally, so we're starting to see the company become much more aggressive globally because the US market for them is a little bit more penetrated. So it's just amazing, and just in terms of just total users, Amazon.com, when you think about the website, you don't necessarily think about it in the context of users, but it's almost as big as Google and Facebook. It's just amazing, and that drives search revenue, and it drives advertising. They're starting to get into advertising. They'll have over $1.5 billion in advertising on Amazon.com this year, so they're becoming a big customer for Smart and Sorrell and all the big ad agency players out there. Alexa, our good friend Alexa here. I don't know. Here's the play. I mean, there's 700 million homes globally that have broadband capabilities to receive or to get kind of an Alexa type of service. There's only 25 million for Alexa right now. They think that's a big play. They are really the leader. You can see in the top chart, Amazon Echo has 72% of the market. Google Home is a distant second, and there's a bunch of others. So Amazon at this moment, Alexa, Echo kind of owns that market. They think there's a lot of growth there. Growth in driving Prime membership usage, which drives the core business. So anyway, 700 million addressable homes by 2020, and they believe that the Alexa, having this in your home, hey, go buy this, go buy Whole Foods, not the company, but just some Whole Foods. They think that's going to be a big driver of their Prime growth. So they're putting a lot of money into Alexa, a lot of money into R&D. Another driver here is just the fact that everybody puts their stuff on Amazon. Over half of Amazon's revenue comes from third-party retailers that just say, I don't want to dealing with my customers and mail and returns and all that kind of stuff. Amazon, you've already got the infrastructure. You've already got distribution points all over the world. You've already got distribution centers, fulfillment centers all over the world. You take care of all the logistics. So this business, Fulfillment by Amazon, has become a huge business for Amazon. It's over more than 50% of all the products sold are just third-party retailers using the Amazon infrastructure. That's been a big source of growth for Amazon, and that's taking money right out of eBay's pocket, just from a competitive perspective. So that's been a big growth driver for Amazon, and they continue to. That's why they continue to invest in building out all this infrastructure, because they need to get as close to the customer as possible. Same-day delivery, next-day delivery, that stuff just doesn't happen overnight. You have to have retail distribution everywhere. Okay, so the web business. This is the business that Wall Street really loves. Couple of reasons. One is the white stuff, the white bars on the left, that's just cloud revenue. Looking to go to $72 billion by 2020, a double-digit growth story. And Amazon is a big player. As I showed you, they're kind of the biggest player in the marketplace. And what investors in Amazon really like is that Amazon actually makes money on their web business, unlike their retail business where they make no money. This is actually a very profitable business for them, so they continue to invest billions into their web services business. Now, close to my heart, the media business. Jeff Bezos is saying, maybe I want to be a media mogul too, like Rupert Murdoch. Maybe I want to get into this Hollywood business. So the question he's put out there is, we think we can be a major media player. We need to get into media to drive Amazon Prime, to drive people to use our Amazon Prime service, to compete with the Netflix of the world. So what we're seeing is they've started Amazon Studios. They've hired a lot of Hollywood talent away from the big studios. Unfortunately, they have to move to Seattle, some of them, but they're really getting into the business. They're going to spend $1 billion on original programming. Just to give you a point of reference, the biggest spender on programming in the world is ESPN. They'll spend about $7.5 billion. Number 2 is Netflix at about $7 billion. you think that CBS Broadcast Network, the Walt Disney Company, 21st Century Fox, $2–3 billion, just to give you a point of reference. These knuckleheads are going to come in year one and spend $1 billion on original programming. Why? Because they can afford it. And same thing from Google, same thing from Apple. Why? Because they recognize that one of the growth areas of media consumption is online video. People aren't sitting in front of watching their TVs at 8 o'clock to watch a particular show anymore, as you know. They're all online, real time, when you want it, on any device you want. Amazon needs to be there, they believe, as an inducement for you to sign up to Amazon Prime, so that you will then spend 3 times as much as the average Amazon person on. So you see how that works? So it's just a business to kind of get in there. The ad business, just real quickly, they've become a major player in the ad business. The ad business, as everybody knows, is, you know, as a Wall Street analyst, when I look at the digital advertising business, I love the revenue. I love the fact that it's growing 20%. I have a buy on Google, I have a buy on Facebook, it's all good. Buy on Amazon, it's all good. But as I stand back and maybe look at it from afar, it ain't a good structure. 2 players, it's a duopoly. 2 players in the marketplace is not good for the advertising publishing community in my mind. Amazon may become a 3rd player in the market. Again, they'll do over $1.5 billion of revenue, or $2 billion of revenue this year, and maybe they can crack that duopoly here. Twitter can't do it. Snap hasn't done it. So for an advertiser, you got 2 places to go. That's why they take the majority of the digital ad spend. So Amazon is becoming a big player. Sir Martin Sorrell, the WPP, talks about it often when he's talking about the state of the market, how they're becoming a player in the marketplace and a big customer for the ad agencies. So Wall Street is really paying attention to this business because advertising by its is a profitable revenue stream, and Amazon can use more profitable revenue streams. Whole Foods came out of nowhere. Nobody was looking for this. I mean, literally walked in on a Monday morning and they bought what? And so, I don't know. Groceries is a tough business. Amazon, you know, it's just a tough business all the way around. I don't need to get into the details. They just felt it was better to buy than to build. And there is a lot of areas that they think they can grow the business just simply because less than 4% of grocery market is online. That's the play. They think they can take that 4% number like they do for other verticals and grow the business. So, you know, that's why they're in there. We'll see how they do. And quite frankly, at $15 billion, Wall Street doesn't care. If it works, it works. If it doesn't, who cares? Really. You know, we did this stupid thing. You know, my retail guys go out and just kind of look at pricing surveys. The biggest negative for Whole Foods is it's too expensive. Well, Jeff Bezos, the day they closed it, they dropped prices 30% in the US. The day they closed. Boom. So there you go. Problem solved. Artificial intelligence, my tech guy put this slide in there. Everybody's investing in it. I think it's a scam, but everybody's investing in it. But my tech guy made me put this slide in there. I don't know. But anyway, pay attention to it. Artificial intelligence, augmented reality, Facebook. Mark Zuckerberg says everything's going AI, AR. These guys are investing in it. Google's investing in it. Apple's investing in it. We'll see whether it becomes a business for Amazon, but obviously there are some very interesting commercial applications of that. So, and the retailers are just saying, listen, the retailers are trying like crazy to compete, and they're making investments in their e-commerce, but we haven't seen really any good success stories, with the exception of Walmart and a couple other names. But as you know, that's been the bear case for retail, and retail companies, retailers have been getting crushed. So. Margins may shrink. Again, who cares? Literally, who cares? Margins may shrink as they get into some of these newer businesses, but investors don't care. Just keep growing the top line because I think e-commerce is going to continue to grow. Price war with Walmart. That's going to be a nice war. It's good for consumers. And that's all I got.